Hey folks, welcome back to the channel. This is Jason, host of Fighting Words Financial, and today in this video I'm going to be talking about TOST, the company that offers an all-in-one cloud-enabled restaurant technology platform that trades under the symbol TOST. Now this platform is built specifically for restaurants. The platform brings you everything you might need to run a restaurant, from integrated online ordering, point of sale, gift card, labor, sales reporting, marketing, and inventory management. So there's a lot to cover in this video today, guys. So I am going to be looking down at my notes while this is recording, and I'll try to cover up my face with some graphics while I'm doing that. So I'm also going to be talking about TOST from the perspective of a client as well as a potential investor in TOST. So also, my daughter always reminds me that if you like this content, please like the video and subscribe to my channel. Apparently, I'm always forgetting to do that. So now there's a very specific reason that I'm talking about TOST right now after my last video on Sofi. And that reason is that I want to, in some way, demonstrate the interconnectivity of Sofi to the rest of the fintech universe. TOST is the technology partner of Galileo Financial Technologies, which was acquired by Sofi in 2020 for about $1.2 billion. Galileo's banking-as-a-service platform and payment services integration form a significant part of the fintech backbone for TOST. In other words, TOST didn't reinvent the wheel when they came up with the idea for this software in order to build their platform. They used things that were out there and already available, and part of that is integrated with Sofi. They used the existing APIs, or application programming interfaces, offered by Galileo and a few other fintech partners to save millions of dollars in development costs and the cost of maintaining a full technology stack. And TOST is still able to offer a unique suite of capabilities that are really tailored to the needs of their target market. And TOST's target market, restaurants, actually really like TOSTs. Now, there are a lot of point-of-sale software systems out there, and there are a lot that are actually specifically designed for the restaurant industry. TOST has a lot of competition in this space, but it has really good reviews, high customer satisfaction, and several first-mover advantages over other products. Now, I am not unbiased at all when I make this comment. While I do not yet own TOST stock directly, one of the businesses that I am a partner in is a TOST client, and from what I am observing, TOST is making rapid inroads as a point-of-sale software system for the restaurant industry as a whole. Researching market share for TOST simply as a point-of-sale system, and more specifically as a restaurant management system, has produced some wildly different numbers, so much so that not all of the numbers can possibly be true, and therefore I don't really trust any market research right now for this stock or for how much market share it's managed to capture, and I think all of the data out there is a little bit problematic. So I can really only talk to some degree about my subjective experience and from what I hear from other folks in the industry who have experience with TOST as a software solution. Researching the company's fundamentals and its prospects as an investment, however, are a different story and will be based on verifiable fact. Let me make it clear also that I am not a daily user of TOST software. I've been really reliant on interviewing people who do use it on a daily basis. Now, I have not made this a secret on my channel, but I don't really talk about it very much. I do own a bar and restaurant as one of my investments, and I'm not involved in the day-to-day management operations of that business, and I'm not an expert in the restaurant industry as well. I am an investor. The bar that I'm a partner in is an entertainment bar in the San Diego area called Good Bar, and we use TOST as our restaurant management software because it does everything, and I mean everything, that a restaurant and bar needs to be run efficiently. Business has been good lately for Good Bar, but it's been an interesting ride. I actually purchased my share of the company back in June of 2020 during COVID, right in the middle of the shutdown. Now, I called the move ballsy at the time, and my wife called it something far different. We were shut down for a total of almost 2 years. Now, I have to point out that total lockdowns didn't last for 2 years where I live. They only lasted for about 3 months. We were not required to be shut down for those 2 years. We made the conscious and what I believe to be the ultimately correct decision that it was more cost efficient and increased our chances of survival to stay shuttered in that time period. My business partner negotiated a series of settlements that reduced our expenses while we were shut down and greatly aided those chances of success once we reopened. we watched a lot of other folks in the industry open prematurely during the pandemic when capacity was limited to 25 or 50% of the restaurant, or limited to just delivery, or whatever else the city and the state came up with based on where they were. We watched a lot of good restaurants close and people go into debt trying to keep their operations afloat on only 25 to 50% of the capacity that was allowed at the time. We chose instead to invest a little bit more of our own money and to revamp the business strategy for Good Bar going forward. Part of that was the adoption of TOST as a complete restaurant management software suite, because we were adding a layer of complexity to Good Bar that we didn't have prior to the pandemic. You see, Good Bar wasn't actually a restaurant prior to COVID. We didn't even have a kitchen or a need for all of the software services that running a kitchen and restaurant would require. Not having a kitchen and being 100% dependent on alcohol sales for the day-to-day business of the company was always a problem prior to the pandemic, and we didn't want to just reopen Good Bar thinking that we'd pick up right where we left off on March 16th of 2020. My business partner, who knows the industry really well, really thought that that was a recipe for failure, and he really recognizes that the only constant in the industry is that the industry changes and we were going to have to change along with the industry. So in 2021, we started looking at the cost of adding a kitchen, and to say that the estimates we got were daunting would be a vast understatement. It's a little like saying the Great Pyramids were a Home Depot DIY project. I think that the cheapest estimate we got was around $300,000 for a really small kitchen that was fully up to code, and that really would have taken away from the comfort and seating space of Good Bar, and it would have required that we probably stay closed for additional months during construction and to take out a large construction loan. We basically just couldn't afford it in terms of time and financial resources. My business partner, though, had the brilliant idea of putting a food trailer in the parking lot. Still fully up to code, it saved somewhere in the neighborhood of 2/3 of the cost over a kitchen, and even 1/3 of the cost over actually getting a food truck. Now, how he was able to negotiate this with the city, with the state, with the licensing board, and the landlord, I don't know, but all credit goes to him. He was able to negotiate a deal to keep it in place and permanently, and it was ready to go when we were finally ready to open on March 12th of 2022, 4 days short of being closed for a full 2 years. We were not, of course, instantly successful, and building that business back up has taken time, but it's given me a lot of opportunity to observe and learn. And of course, being a technology investor, I'm always interested in the technology packages that the businesses that I invest in use, as I sometimes think there's a better way to participate in the growth of any business sector is to invest in that particular technology that's being used by those companies. Because sometimes the business that you are interested in can actually be considered really a derivative of another industry. A good example would be to invest in the battery supply chain rather than investing directly in any EV maker, as that may be a better bet than any single EV maker. Someone will be successful in the electric vehicle industry, and that someone will need batteries. So it doesn't matter who's successful in EVs, they're all going to need batteries. So what makes TOST great? In a word, it's consolidation. This by itself doesn't make TOST unique. There are several similar products out there, and there's a lot of competition in this space, but only a few that are solely focused on the restaurant industry. And TOST revenue and market share is growing very rapidly compared to its peers. This is why the market share data for POS systems can't really be relied on at this point, because it includes just about everything that uses, or every company rather, that uses a point of sale system. Most point of sale software is more generalized and it's not targeted directly at restaurants. The top 4 packages for restaurants are probably TOST, Clover, Square, and Lightspeed. You could probably change out any one of those depending on the month that you're reading, market share data. No one has a lion's share of this market either. It's really fragmented. Square definitely has the largest market share for retail point of sale, but not for restaurants. This means opportunity for someone in a winner takes the most type of environment, and I think that someone is probably TOST. Now, that thought is entirely subjective. It's just based on the number of people who tell me that Toast is, quote, taking over the industry. And so take that assessment with a grain of salt. I talked to a bunch of restaurant owners that I personally know, and they all know each other, so they may be recommending the software to each other and introducing bias. So over the past few decades, restaurants have typically thought about their various technology needs as really being separated into distinct buckets. In the past, a restaurant might have a point of sale system. They might use QuickBooks for accounting, separate payroll software, use a different online ordering system to accommodate Uber Eats, DoorDash, and companies, as well as email marketing, work schedules, inventory management systems, all from different vendors. And the staff would have to learn how to use each system and how to transfer data and records across systems. On a typical day, a staff member might actually need to do a lot of computer work transferring email lists from their online marketing systems from online ordering systems to marketing tools, transferring sales records from point of sale into accounting software, and all that stuff that's related. This disconnection created major operational inefficiencies and resulted in higher training costs for employees and missed opportunities to provide better experiences to guests. This has long been known in the industry, and this issue is not something that your average restaurant could afford to address on their own by developing their own technology stack. So over the last few years, cloud-based systems like Toast have grown into fully integrated restaurant technology platforms, offering all of the things that I mentioned before and more in a single all-in-one solution. A single restaurant platform providing all of the restaurant's technology needs in a single hardware and software interface. Gone are the days when a restaurant needed like 4 or 5 different laptops to accommodate all of the Uber Eats and DoorDash and all of the other food delivery services. Toast offers one of the most extensive and popular all-in-one restaurant platforms. And that's because Toast platform consolidates all of your restaurant's data sources and works together in ways that individual software solutions cannot, particularly when it comes to that online ordering, which can really add significant amounts to your bottom line, but in the past required you to have those 3 or 4 tablets floating around the restaurant to accommodate the various online food delivery services. Those days are gone for the leading software packages, third-party integration of DoorDash, Uber Eats, and a couple of other companies. It's all done seamlessly now through a single interface for most software packages. Surprisingly, despite delivery fees significantly adding to the cost of food that we prepare at Good Bar, we have seen a substantial increase in online ordering, and it has essentially completely replaced phone orders, and this is happening across the entire industry. Economies of scale, of course, play a large part in using online ordering services through Toast. Toast delivery services actually reduces commissions paid to third-party delivery companies. With more than 74,000 clients, Toast has been able to negotiate much better pay arrangements for its clients that use their third-party delivery system. So restaurant point-of-sale systems are a critical part of a modern restaurant. They allow restaurant owners to track sales, manage employees, inventory, manage tables, run reports, and market. A good restaurant point-of-sale system can make a big difference in a restaurant's bottom line in terms of cost savings and efficiency. Now, restaurant efficiency is always a concern, but in today's high inflationary environment, it's never been more important. Recently, restaurants have seen the largest increase in restaurant costs and labor constraints in the last 4 decades. While inflation pressures are easing, surviving business owners have learned valuable lessons about belt tightening, and a good restaurant managed software package is a part of that. So what makes Toast better than the competition? So I'm going to be honest with you, and I'm going to say it's not really that much, and perhaps we shouldn't really be framing our conception of Toast or any competitor in the industry in this manner, and I'm going to get to that in just a minute. But at least when it comes to the software solutions that are specifically targeted towards restaurants, software developers and designers really understand those needs very well, and features are designed to be substantially similar across all of the major platforms. The pros and the cons that I'm hearing about the leading 4 or 5 packages are really dependent on the needs of your specific business and really the personal opinions of the people that I was asking. They weren't giving me any real concrete reasons to think that one product was superior to another. It was mostly just based on personal opinion. And I even got the feeling that many of the users of these systems they were not actually fully exploiting all of the features of the software, and in many cases weren't aware about some of the features that I was asking about. And to be honest though, this is common across a lot of fintech products and platforms that I research. So competition in this space is pretty fierce, and no one product really stands out, and no one product has ever dominated this industry either. And it's always been a winner takes the largest bite type of environment, and Toast has already taken a large bite out of the industry with 74,000 customers. On the surface, it would seem like a company like Block, the maker of Square point of sale software system, might be a better investment than Toast based on current or recent cash flows with their long history of actual profits. Toast is a company that is still in its growth phase and is yet to reach profitability, and it's still in the growth at all costs mode. But hey, we're technology investors, right? If you're watching this channel, you are interested in technology. We make investments all the time into companies that are hemorrhaging money because cash flows will eventually catch up. And with a software as a service company, those cash flows catch up when the company scales enough. So yeah, that logic sounded a lot more lucid 2 years ago before the tech crash of 2022. And in terms of market cap, Block is about 50 billion and Toast is about 12 billion. Now, if I compare revenue numbers, that really should back up the difference in market cap, right? The difference starts to look a little out of whack though when I actually do. And I take a look at Block's annual revenues in 2022. Estimated to be about 17.47 billion, and Toast is estimated to be about 2.72 billion. The 6.5 times difference in revenues versus the only 4 times difference in revenues and market cap might suggest that Toast is somewhat overvalued when compared to Block. However, you can make the argument that the two businesses, despite being in the same fintech space, really aren't all that comparable. Block is engaged in many other lines of business other than serving restaurants, and while you may look at revenue diversification as a good thing, underperforming sectors of the business may end up being dead weight as well. Additionally, revenue growth for Block is likely to end up being relatively flat year over year, whereas Toast is likely to experience north of 60% revenue growth year over year for full year 2022. You could easily make the argument that both companies are overvalued based on current cash flow, and that the difference in market cap versus revenue is overshadowed by the much higher revenue growth rate of Toast. There is an extremely large addressable market worldwide, something like 28 million restaurants, and at this point, Toast is only available in the US, UK, and Ireland. Toast has about 74,000 clients in these areas, so there remains tremendous amounts of opportunity, and there's still room for international expansion. And also, Galileo's technology platform is not limited by geography, and their systems are integrated worldwide. I would expect to see Toast to expand internationally quite a bit further in the next few years. The needs of the restaurant world dictate that this is another case in the fintech world where technical considerations might not matter that much. But the winner doesn't take all in this industry. There's not going to be a single winner that emerges in this industry because of market fragmentation. And the winner that takes the largest bite is the one that we're all going to see as a success. And it's entirely possible that Toast may be this company. Now, Toast is going to release Q4 and full year 2022 results shortly. And I think it has the right combination of good business practices and macro tailwinds to outperform. And while short-term performance is nice, I also think that a solid long-term future is ahead on this company based on revenue growth and customer satisfaction. Admittedly, my survey on customer satisfaction is in no way scientific. I just talked to business owners that I know personally who use Toast, who all happen to know each other as well, so there is likely bias. But I tell you what is not biased, and that is data. It hasn't really been the case in the last year that we can talk about macro tailwinds being in favor of any industry. But in the case of the restaurant industry, they really have been. According to a survey done by Pop Menu, by October of 2022, US customers were dining out 58% more than the prior year. 30% of all customers spent an average of $180 a week in restaurant food, which I find absolutely ludicrous. The top 50% of diners spent $125 per week, which I also find ridiculous. But perhaps most shockingly, 36% of survey respondents actually stated that grocery prices were so high that it was more cost effective to order from restaurants, which I find mind-boggling and many of you might actually find unrealistic. So restaurant demand is apparently very strong, and there are a lot more data points in that survey that point to an inescapable conclusion that eating out is more than keeping up with inflation and rising costs. It's growing at a rate that wasn't anticipated. This is also reflected in the blockbuster jobs report that just came out recently, with more than a quarter of new jobs coming in the leisure and hospitality industry. In the last year, growth has been really good for Toast. In Q3 of 2022, Toast reported revenue growth of 107.12% for the trailing 12-month period. The company has shown very attractive gross margin expansion from recurring revenue streams like product subscriptions and payment processing fees. And annual revenue per user for Toast has really exploded in the last 4 quarters as more features of the platform are being exploited by newer customers who are signing up, who are seeing more engagement and more upsell possibilities. So my bottom line for this company is that the future looks bright. But as with a lot of growth stocks, how far away that bright future is really the question. Revenue growth looks strong, but this company is not yet profitable. While this company is likely to see a narrowing loss when compared to full year 2021, which is around $485 million, I still expect full year 2022 loss to be somewhere around $275 to $300 million. Anything less than a $275 million loss for full year of 2022 would be a big surprise for me. Adjusted EBITDA has also seen pretty large improvements over the last 4 quarters, but the company is still quite a ways away from GAAP profitability. So I am thinking of investing in this company directly, but I'm in no hurry to do so, as I think that conditions over the next year are going to present plenty of opportunities to invest around the current price of $22 a share or so, as the price goes up and down in response to macroeconomic conditions. I also think that by owning shares in their technology partner Sofi, I am already indirectly participating in the growth of Toast without taking on the additional risk of investment disappointment if that company doesn't grow as I expect. So once again, not in a hurry to sink a ton of cash into this company. I'm going to wait to see and likely dollar cost average my way into a full 100 shares over time. So as always, folks, this is not a recommendation to buy, sell, or hold any individual security. You have to do your own research, make your own decisions. Thank you very much, folks. And if you like this video, please subscribe to my channel. I'll see you next time.